Hello and welcome to another edition of Ask Kamari's Investing Basics Challenge. I am Kamari Ellis. Today is video number 25. And today, during this video, we're going to make a quick program change, but I think it's a change for the better. We're going to talk about dollar cost averaging. Now, I know I promised you dividend reinvestments. That will be video number 26, but I thought it would be appropriate to talk about this first, just so you can get a better understanding of the power of dollar cost averaging, because you use dollar cost averaging in dividend reinvestment programs. And what is a dividend reinvestment? Or excuse me, what is a dollar cost averaging? I'm sorry. Dollar cost averaging is basically putting the same amount into an investment program day in and day out, or month in and month out, or week in and week out. So for this example, let's say you save $200 a month and you say, you know what, I got enough savings. I've got 6 months worth of my savings, 6 months of my salary set aside. Now I want to start investing. I want to build up a portfolio. So you take 100 of that $200 and you say, I'm going to buy a particular stock. Let's say XYZ stock. And out of that stock, we're going to buy it every month. So today is April 30th. I'm recording this on April 30th, 2014. And, on the first of the month, you're going to say, hey, I want to buy $100, whatever $100 can buy me. So you find the stock, XYZ stock, and it's $10. It's $10 a share. So with that $100, that $10 a share, you get 10 shares. You now own 10 shares. Congratulations. And then the next month rolls around. It's June 1st. All right. That same $100, you take it out. You buy that stock, XYZ stock. But now it's trading at $9 because stock prices fluctuate every day. They're never the same. But today, you're going to be able to buy 11 shares. So with 11 shares, you now have 21 shares in total. You're building wealth. You're accumulating a portfolio. So the next month after that, again, that same $100 is becoming a habit, and you're doing it every month. You're going to buy XYZ stock. This time it's $8. So now it's $8, and you're able to buy 12.5 shares. So in total, you have roughly 33 shares, 33.5 shares. So you're building a portfolio, and all in, you've invested $300. So that's dollar cost averaging, quick and dirty. Now, I wanted to give you a real life example of the power of dollar cost averaging. So I know everybody is part of the iBrigade. I know I am. Yes, the iBrigade, iPad, iPod, iPhone. I've had one kind of converted, but I still have my iPad. But let's imagine that you bought Apple 30 years ago, April 30th, when it was trading at $3.44. You had $100 and you said, I want to invest $100 every month into Apple, nothing else. And the first time you buy it, you invest $100. The stock's $3.44. You're able to buy 29 shares. So every month after that, you invest $100 faithfully. You don't think about if Steve Jobs got kicked out, Steve Jobs died. None of that matters. You just said, I want to buy Apple. So you've been faithful for all those 30 years. And today, the share price closed at 500. You know what? Let me pull up the actual share price right now for you. Share price is $597. So you went from $3.44 to $597. And guess what? You only invested in grand total $36,000. So that $36,000 that you invested by simply just investing $100 a month accumulated to over $2.2 million. Now, a lot of times we take for granted the little things, but the little things really do mean a lot, and they really can accumulate to become great fortunes of wealth if you're a proper steward over them, and you have the foresight and wisdom to make wise and sound investments. Now, this isn't a recommendation. This is only for educational and illustration purposes. But, you would have brought Apple back on April 30th And today you would have 36,000 shares, and again, it'll be worth $2.2 million. Actually, $2,246,505. That's what the approximate worth would be. Forget about dividends. Forget about all of that. That's just what the straight price is. So that's dollar cost averaging. That's the power of dollar cost averaging, the Apple illustration. And I will be back for the next video, which will be video number 26. And we will talk about Europe, dividend reinvestment programs. Until then, stay peaceful, profitable, and prosperous. I'll talk to you. Bye.